This CenterPoint for Agriculture video will be on the topic of budgeting, and it will cover entering in budget activity to balance sheet accounts except for raw materials, work in process, inventory, and loans. Those will be discussed in separate videos. In a different video, we discussed the difference between choosing different entry modes of budgeting. So I am going to be doing this activity in two separate budgets. One budget is set to offset to cash. So if I were to go to File and Properties and over to the Entry Mode tab, you would see that this one is set to Journal Entry Offset to Cash. Okay, now if I go over to my other setup, I have one that is budget open entry. So on that one, if I were to go to File and to Properties, we would be able to see that the entry mode is set to open entry. So I'm going to show you how each one of those affects your financial statements. I'm going to go back over to the budget, which is set to offset to cash. Okay, now CenterPoint has the ability to give you a complete pro forma budget. So we all saw earlier on another video that all of our budgeting activity is always entered in on the flow of funds tab. So at the bottom, we've got three separate tabs: the flow of funds tab, the balance sheet, and the income statement. And near the top, we have all of our income statement accounts. So we have revenue, and if I collapse that up, you have cost of goods, you have expenses, and other revenue and other expenses. But after that comes all of your balance sheet accounts. So CenterPoint can have a complete pro forma budget in it that includes not only activity to your income statement accounts, but also activity to your balance sheet accounts. Now, a lot of the activity to balance sheet accounts will be entered in very similar to the activity that was for income statement accounts. So in this particular database, I happen to have a note receivable. So I'm going over to the balance sheet right now, and we can see that we have a note receivable that has a $450,000 balance. Now, the person who has that note makes one payment a year, and they make that payment in June. And this particular payment is going to be for $100,000. So we want that to reflect, cash coming back into our bank account in June. So we want to be able to go ahead and put that activity in. So to do that, I'm going to go back to the Flow of Funds tab, and I'm going to come down here to Notes Receivable, and we're going to go over here to June. Now, it's as simple as going ahead and entering the value into the cell, just like we did with income statement accounts. Okay. However, if you're entering in a decrease, which we weren't typically doing on the income statement and expense accounts, if you're entering in a decrease, you can simply enter it in as a negative number. So I would be decreasing this notes receivable rather than increasing it. So I'm going to put in a minus $100,000. Just need to make sure I have enough zeros there. Nope, I think I have one too many zero. Okay, so I would go ahead then and hit tab, and that would go ahead and put in the minus $100,000. Now, since I'm using journal entry offset to cash, we can see up here, I have some other activity going on, but we can see up here on the line for my cash that it's actually done quite an increase. Now, this was an accumulative amount, so it's this $100,000 and some of the other budget activity that I've already entered in which decreased the bank account. So, but we see that activity has occurred there. Okay, now this should affect my balance sheet. So if I go over to my balance sheet we're going to see from May to June that increase in our bank account for that activity. And then down here on the notes receivable account, we see the original balance at 450 in May, in May, and then it goes down to 350 in June. Okay, so that's as easy as it is to enter in activity to balance sheet accounts that are not inventory, raw materials, work in process, and loans. Those we're going to have to discuss separately. Now, I'm going to go back over to the flow of funds tab here and highlight that line again. Another way to go ahead and enter in that activity to one of these balance sheet accounts is to go to Edit and to go to Adjustments. And then you would see all of the amounts over here on the right-hand side. And so you could just simply enter in the adjustment that you wanted to make to that balance sheet account. Okay, now if you were to go ahead and review all of the videos on basic expenses and basic revenue and how to allocate an amount to multiple periods, how to assign an amount to multiple periods, and also how to copy an amount across multiple periods, those same pieces of information would apply to these balance sheet accounts that are not a loan, are not a raw material account, or a work in process account. Okay, so now I'm going to go over to my open entry one. Okay, so you can see up at the top, I'm on this other budget that says open entry. And I'm going to once again go ahead and collapse up these these income statement accounts and come back down here. Okay, so in this particular budget, if I were to go over to the flow of funds tab, we would still see, to the balance sheet tab, we would still see that notes receivable at $450,000 because we haven't entered in the budget activity here yet. Okay, so I'm going to go ahead and do that. We're going to go to June, just like we did on the other one. And we're going to enter in, not a positive $100,000. We wanted a minus 100,000. Okay, and I'm going to just tab off of that field, and it's going to go ahead and enter in that minus 100,000. Well, since I'm not using journal entry offset to cash, it did not affect my cash account on this particular budget. So when I go over to the balance sheet, you'll see down here on the line for the notes receivable that it did decrease the notes receivable, but up here on the bank account, it didn't do anything to the bank account. So therefore, using this method of entry, I would wind up having a balance sheet that didn't balance unless I go and individually adjust the bank account myself. Okay, so people using budget open entry typically are not budgeting for balance sheet activity. Now, once again, this activity that I have discussed in this video is only for balance sheet accounts that are not raw materials, work in process, inventory, or loans. Now, with the work in process and the raw materials, you could use this basic method for entering in purchases to raw materials or work in process, but it would not be used, especially, it could be used in the open entry since it doesn't affect other accounts when you go ahead and put in those entries. But if you're using budget offset to cash, you could put the purchase of raw materials and the purchase of raw work in process in just like I did for the activity to the notes receivable. You could put that activity in this way, but moving it out of those accounts will be done using a different method, and that's going to be discussed in another video.